of Hindustan Aeronautics. They delivered a solid set of numbers. The order book as well is looking very, very strong at around 8,400 crores. Well, to discuss the outlook and the opportunities for India's big defense localization push, we are joined by Mr. Ananthakrishnan, the Chairman and Managing Director of the company. Hi, sir. Good morning, and thanks so much for speaking to us here at CNBC-TV18. Well, I was looking at your first half of the year, and in terms of your revenue mix, the repair and overhaul, well, that contributed a higher proportion in comparison to manufacturing. Could you tell us, in the years to come, how do you see this mix shaping up between both these two segments? And earlier you were talking, I think, about a margin guidance of around 24 to around 25% in the longer term. You stick to that?
Yeah. Good morning. Thanks for this opportunity again. And as far as your first question towards your repair and overhaul and manufacturing ratio for the first half of the current financial year FY23 is concerned, as we have already indicated in the last financial year itself, there will be some pressures on our manufacturing orders in the current year because the platforms sales, which we call it as manufacturing, major contracts will all be getting over in the current financial year, because of which the gap will have to be filled by the repair and overhaul activity as well as for the supply of spares. That is one reason why in the current financial year FY23, the ROH activity and the supply of spares is expected to be somewhere around 60%, and the balance 40% will be in the manufacturing sales. So this trend is likely to continue for the next year as well, because our new contracts which we have concluded and which is pending for almost 84,000 crore, the deliveries will start only from 24, last quarter of 24, which would mean that 24, 25 onwards it will be the manufacturing contracts will get executed in full, and then the ratio will change. The ratio is expected to be for the FY25. The ratio is expected to be in the range of 50% between ROH and manufacturing. But for the current FY23 and FY23 and 24, it will be in the ratio of repair and overall will have a higher ratio of around 60%, and manufacturing will be a lower ratio of 40%. And this will be for the next 2 years. And as far as the EBITDA margins are concerned, we have indicated 24-25% in our initial guidance, but we expect it to slightly exceed that, because the ROH activity, since it will be a larger portion of ROH activity will be there for the current year as well as for next year. Our EBITDA margin also is likely to be a percentage point more than what we have anticipated. So it should be in the range of around 26% is what we expect. So it should improve.
Mr. Ananthakrishnan, isn't
we earlier guided at 24 to 10.
Got it. Mr. Ananthakrishnan, aren't margins on repair and overhaul much better? Isn't it a much more profitable business? So wouldn't you want to kind of lean and get into more of that? What's the difference? I mean, typical manufacturing margins and repair and overhaul?
No, it's not that way. We need... repair and overall, it's again flowing from the manufacturing platforms. So for the revenue growth, manufacturing platforms is very, very important to us. And that is where we are focusing on. So once we start delivering the manufacturing platforms, the overall EBITDA margin will still be at 24-25%. But then the repair and overall subsequent years will flow from those manufacturing contracts. So manufacturing contracts is equally important for us, and repair and overall will contribute towards your profitability, but manufacturing contracts will contribute towards your revenue growth. Okay. So both we will have to be there to see that both revenue growth and EBITDA is being achieved.
Okay, so just to clarify, your EBITDA margin guidance, you have revised it higher to 26 to 27% versus 24 to 25% that you guided earlier, correct?
Right.
Okay. And your growth guidance, so you maintained at 7 to 8%. All right, got that. I also want to understand, your receivables have gone down, and that's a big positive. They've reduced to about 5,000 crores in the first half of the year compared to almost 5,500 crores in FY22. Do you see a further improvement as far as receivables are concerned?
Receivables, yes, ma'am. Today the receivables are we are quite comfortable at around 60 days, and I don't think anything further reduction is possible, because the cycle time required for us to complete the order and then the documentation, to complete the documentation and realize our payments, it will take on an average 60 days. So I think 60 days of receivables is quite good for HAL, and if we can maintain those 60 days receivables with the advances which we get for all our milestones, our working capital cycle is expected to be very comfortable. We don't anticipate any problem in over that. 60 days is quite a good number.
Okay, all right. And so just to confirm, your revenue growth that you're looking at is how much? Single digit, or do you believe that it will be a 10 to 15% growth for the next few years?
No, for the current year as well as for the next year, that is FY24, it is expected to be at single digit as
Single
what
digits.
I have indicated earlier.
Got it.
It will be in the range of around 8%.
Yeah.
And the double digit growth is expected to start from FY25 onwards.
Got it. All right. So, since you said that manufacturing is also going to be the revenue driver, in the near term, it may not contribute too much, but otherwise it's going to go to 50%. So, your capacity of Tejas is going to be important, right? Could you tell us what is your capacity? You were increasing it, I think.
Right.
So when does the additional capacity come on stream?
Yeah, already we have started the augmentation of the capacity from 8 to 16 numbers. In fact, the capital infrastructure which is required for that has been created. The second line of Tejas manufacturing program also has been, have been operationalized. Added to that, we are also trying to develop the private ecosystem by outsourcing many of our work packages to the 4 major vendors in the private sector, so that they will also be start supplying from next year onward. So all this put together, the Tejas at the minimum will be at 16 aircraft per annum from FY25 onwards. And depending on further order book position which we expect to receive, we will be able to scale up to 24 numbers without any much addition to our capital investments.
Okay.
Mr. Ananthakrishnan, I have 2 questions. One, the only constraint is capacity, as I understand it, right? You're saying that you're expecting 1 lakh crores worth of orders in manufacturing orders in the near term. So order book is ballooning. So is there a thinking in the government company to kind of Ministry of Defence to materially step up capacity in a very large way? Because indigenization, defence needs are huge. And the thinking is much of it should be made here locally. So that is one. And second, on that repair and overhaul, a very layman question, but would you said that what you manufacture kind of feeds through later into repair and overhaul, but in defence contracts, repair and overhaul is only for stuff that the company makes, or you can kind of go into repair and overhaul for other sort of other items which were not manufactured by you. So could that grow larger? Go on, sir.
Yeah. See, as far as the capacity is concerned, I can confidently say that we have got sufficient capacity to manufacture any number of orders, any number of quantity. And like, for instance, the Sukhoi capacity which was there in Nasik, and now that the Sukhoi order is getting completed, we have got the capacity released for manufacture of other aircrafts. Similarly, in the aircraft division and in the LCA division, we have got the capacity to manufacture both the LCAs, because aircraft division also can manufacture LCA and LCA division also can manufacture the Tejas. So which would mean that there is no capacity constraints as far as the fixed wing aircrafts are concerned, both in Nasik and in Bangalore put together. Added to that, as far as the helicopter segment is concerned, we have already have an established facility in Bangalore manufacturing close to almost 30 helicopters per annum. And we have also added a huge capacity in Tumkuru, which is also getting operationalized now. And where we can manufacture up to 60 helicopters. So depending on the type and requirement of helicopters, we could go up to 90 numbers per annum in the near future. So all this would mean that capacity is not going to be a constraint for HAL. In fact, we are looking for more orders to expand our capacity. And today what we are focusing is that to see that the orders are getting realized so that the products will be produced to our full capacity and no idle capacity will be there at HAL. So capacity is not going to be a constraint.
Capacity is not a constraint.
The second part of your question on the...
Go ahead.
Is not a constraint. And the second part of it in the repair and overall, you were asking whether that it will flow, whether it will be only for HAL manufactured platforms or even for the other platforms. Basically, we restrict ourselves to ROH activity to HAL manufactured, which would mean that could be both our own design and developed platforms and also the licensed productions which we do for the, which we manufacture. So it will be restricted to HAL platforms, but we will also look for opportunities, from the other platforms if at all it comes through our way. And if it is going to be commercially viable and profitable to HAL, we will not have any hesitancy to take up those things.
Okay, the last time you had said that you have a total order visibility of 60,000 crores in the next 3 to 5 years. What about the international orders? Are you seeing any pickup over there? And is it a part of this, this vision of 60,000 crores over the next 3 to 5 years. How is the order visibility on the international front?
Yeah, international front, as you know, ma'am, it is going to take, it is not something which will happen very soon, in the sense that we have been aggressively following up at least 4 or 5 leads which we have got. The recent one, as you know, we have been there with Argentina. There have been quite a good number of inquiries, and in the Philippines recently our team has returned 2 days back. The inquiries have been quite good, and the interest shown by them also is very good as far as our helicopters are concerned. And Malaysia, we have already bidded. Of course, there are challenges as far as the Malaysian order is concerned because of the recent political developments over there. But all in all, we can say that there are visibilities there, and we are also aggressively following it up. We expect it to orders to materialize maybe in the next 1 year, at least one breakthrough order which we should get. That will open up the possibilities. So we expect that the international orders should materialize in the next 2 to 3 years.
Okay, all right. So just clarify a couple of points. The Malaysian order, is it on or is it off? The political uncertainty out there, that's what's worrying the street. Is it still on?
Yeah. As far as HAL is concerned, it is still on, but definitely there are challenges which was not there earlier because of the recent changes in the political development.
So when does that get
cleared out? But we are still
out?
on, our product has been shortlisted.
Okay. And when do you get clarity on that,
We'll have to wait. We'll have to wait.
You can't give us a
clarity.
time?
Maybe we should get it in the next 15 days. Yeah, some 15 days to 1 month time, we should get some more clarity.
Okay, that's about Malaysia. That's out of the way. You told us receivable days will be at around 60 days.
Yeah.
Working capital as a percentage of sales, I think it's around 23-24%, which is superb. You expect it to hold at these levels? What should be the number we'll work with?
Yeah, we'll be able to hold the days, because now that since our sort of working capital is upfront funded by the customer by way of various milestone payments, we don't foresee any working capital problems, and what is presently there, we will be able to maintain those things.
Final question, sir. Everyone is waiting by for this. Is there a divestment on? Is there some kind of an OFS overhang? Have you heard anything? That keeps coming up. But have you heard something?
No, as far as we are not aware of any such development. Probably the government of India will be in a better position to tell them.
So no OFS in the works?
No, as of now, nothing. We have not heard anything from the ministry.
Okay, well, we'll leave it at that. Mr. Ananthakrishnan, thanks a lot for joining in, and all the best for the next year or so. That's HAL. They have raised their EBITDA margin guidance to 26 to 27.